So how the U.S. stocks world markets have been hurt by the increased tensions between Russia and the Ukraine? Let's kind of step back and take a closer look at how this behaved this week. The Dow fell more than 150 points, or nearly 1%. The S&P 500 and Nasdaq were also down almost about 1%. Investors were very cautious following the news that Russia has moved forward with military intervention in Ukraine. Ukraine's new leaders have accused Russia of declaring war. Stocks in Russia took the biggest hit. The MISEX index tanked almost 11%, while the market vectors Russia, the ETF RSX, was down 7%. Investors seem to be very concerned by threats of serious sanctions against Russia from the United States and Europe. Russia's central bank reacted by hiking interest rates, saying it wanted to maintain financial stability and inflation levels as market volatility increases. All the major European stock markets had a nice reaction to it. They fell sharply in the afternoon trading, with Germany's DAX dropping about or more than 3%, where France's CAC 40 was off by more than 2%, and the London's FTSE 100 down by 1.5%. The Ukraine fears hit most Asian stock markets as well. Hong Kong's Hang Seng Index closed a 1.5% lower, and Tokyo's Nikkei dropped 1.3%. Stocks in Shanghai and Shenzhen bucked the trend and moved higher. So, through global markets were getting knocked down, we don't expect to sell off to last long. There has been some volatility in the capital market as a result of the political and military uncertainty in Ukraine, which obviously have naturally exacerbated concerns about the country's fundamental economic weaknesses. Now, the Ukraine's problems may raise more concerns about emerging markets as a whole, but we don't expect this crisis will trigger another global recession. On the other hand, and it is valid to look, meanwhile, as the investors seek safe haven assets, gold prices rose by 2% to around $1,350 per ounce. Investors were buying U.S. Treasuries too, pushing the 10-year yield down to 2.61% from 2.65 late Friday. Bond prices and yields move in the opposite directions. The price of oil is also up, with crude prices rising by 1.5% to nearly $104 per barrel. Russia's involvement clearly magnifies the scope for contention and increases the possibility that global energy prices will be affected both directly and indirectly.